Hi traders, Nathan Bray here from ACY Securities. Well, recently I've done a playlist, a full 5-part essential things you need to know when trading the markets. So if you want access to that, folks, the link is in the description below, and clients are giving us a really good wrap regarding these key elements that one might need to consider before you start trading. And if you've got any questions about that, happy to assist any of our clients as well. So what we're going to do now, folks, is dive into the charts and have a look at this week. And I'll recap some of the key levels, how we're choosing those levels. So the 3 things we're looking for is we're looking for a clear trend, one direction or the other, using a daily chart. Then we'll look for a significant pullback using our fib tool. And then we want to see levels that might correlate with key support or resistance levels. If we're day trading, we might go daily pullbacks to the 4-hour, or longer term trades, we might look at the bigger picture like weekly levels and then get pullback levels that we might consider, say, using our daily chart. So folks, if you want to be involved in our live interactive trading feed, so these key levels, as I see them, or our team here sees them, we'll broadcast it out live to you. So you can have a look at where these 3 things are happening, and you can therefore make your own decision. Remember, this isn't a signal service. This is about people who want to grow a beard, get tough, get in the market, and do manual trading the way it used to be done. Okay, traders, so let's start with gold against US dollar. This is a level I was showing in my last video explaining how to find a significant level and isolate it. So let's just run through that again. So we can clearly see the trend on gold here on a daily is up. So it's putting in higher tops, okay, and it's been putting in higher bottoms. So we know that our bias is to be a buyer in line with that trend. So I just draw on the daily, this daily move up, I'll draw my fib tool in, and I was looking at a pullback to this green area here because it's the 62 fib retracement level. And it also coincided with a previous, and you'll see these dots here, is your support and resistance levels. So it coincided with previous resistance, potentially acting as a floor, a 62 fib retracement, and we're trading in line with the buy trend. So if I move from there, we'll see how this worked out. And so far we have got a significant move higher and a bounce from this particular area. Keep in mind though, it did at one point move down a little bit lower. So that's where we need to decide on our risk parameters. So that's an example there where we've isolated the level, trading in line with the trend, a significant pullback using our fib tool, and it coinciding with some other element agreeing. So that's your previous roof as resistance, potentially acting as a floor. All right, so there's the level and there's the result over this week. Okay, let's go in now and take a look at some of the majors. So I'm going to start by looking at the euro against US dollar. So remember, same strategy, same pattern. We're looking at the euro dollar, and we're saying that the euro dollar is putting in lower tops. There's a bottom, lower bottom. So the daily trend has been down on this euro against the US dollar, okay, for the last sort of 10, 15 days. So knowing that, I'm saying to myself this week, I've got a bias towards being a seller. So what I'm looking for is some kind of significant retracement. So because I'm on a daily, I might be looking for, say, levels for intraday trading or swing trading. I'll drop down to, say, a 4-hour chart. So on the 4-hour chart, you can see when price is in a significant move down, so it's moving down from here all the way down. Let me just draw that in so we can see this move down. It's about 76 pips down. So once it's down, what we're looking for is a pullback. So I'll just draw in the fib tool. So this move down, failing at last week's high. And we go all the way down to the bottom. And then look what happens. Price rallies back up to the 62 fib retracement level. And look what that happens to be. a previous level, I'll draw it in for you now, of a floor acting as a roof. Okay, I haven't drawn that in perfectly, and nor does it have to be pip perfect here. We're just trying to find a zone in the market. So that's where I'm saying, right, price rallied back up, and it failed there once, twice, 3, 4, 5 times. So it can do retests and provide you, if you're an intraday trader, lots of trading opportunities to trade that. So you're looking at moves before it finally failed of around 30 pips each. And then eventually when it did retest and fail, you've got a sort of 60, 70 pip move down, okay? And if you're putting a stop, say a 10 pip stop or a stop above the previous high, then that is giving you, potentially up to about a 6-to-1 risk reward on your daily trades. So then let's continue going forward on this euro dollar, which we've seen this week. The trend continues lower. So as soon as we see this bottom here broken, which we did see pull down, we can draw in our fib tool and say we have a bias towards being a seller. Price gets down to here, and then look what happens. It rallies back up to the 62 fib retracement, which coincides once again with a pretty significant daily resistance level, which it hits again, and price fails at that resistance level. So it's all about isolating these zones, and these are ones that we've seen this week. And surprise, surprise, we end up getting a very similar 65 to 70 pip move down from there. So that being said, it's very easy to show the sequence so that people understand it. But now I guess what we've got to do is say, all right, let's assume that we're not in any trades on this. And let's have a look at the current situation. So let's see if there's any levels we might be interested in today. Keep in mind, NFP is tonight, so we could get some significant volatility occurring. Some people might like to stay out of it. Some might like to trade it. So if we just look at this move from top to bottom at the moment, the trend is down. So we could be looking at, could price rally up to the 79? Which coincides with this sort of head and shoulder pattern on the 4-hour, okay? And it would also be going up just above last week's low, okay, which it's broken below at this point. So if we're trading with the trend, this would be a level that I'll just paint in for you that I could keep an eye on. So that sort of head and shoulders pattern, will that get retested? Now keep in mind, it could plummet lower, and you completely miss out, and the trade may not get there. But what we're doing is sticking to our strategy and trying to just isolate the level. If our view is that it's not going to get above these significant levels, then of course we could zoom in on a 15-minute chart and start to keep an eye on the central pivot today and the figure, okay, and see, will we get a reversal here? So what we're doing is saying we don't know what the market's going to do, but what will be my plan of attack? Where am I going to see potential levels I want to trade off? And therefore I can sit there and look for changes of direction for or utilizing whatever trigger you want to use to trigger into the trade. Right now it's going up, so we'll keep an eye on that. All right, let's go and have a look now at pound dollar this week. Very similar scenario. So we can see that pound dollar, very similar to the euro dollar, it's putting in these lower tops and bottoms. The trend is down. So if I drop down now to a 4-hourly, and you'll see it's in effect, it's somewhat similar to what we saw on the euro dollar. It's just that it's been a little bit more exaggerated. So I say the trend is down. You can see price breaks through this previous low, and then it rallies back up, very similar, and that previous low starts to act as resistance. It also acts as last week's high, which it's failing at, confirming that this the market is selling this pound dollar, okay? So if I was to use the 4-hour and I drew in my fib tool from the most recent sort of top area to bottom, you'll notice that it only rallied up to the 38, it didn't get up to the 62. Okay, so therefore, based on the strategy, as much as price did continue lower, it wouldn't have set up in this case. So therefore, I would have had to choose, say, the euro dollar example over the pound dollar because it wouldn't have given me that decent retracement. And therefore, this would, in effect, be a miss. Okay, it did rally up to the 38. However, if you were using the fact that it was a significant level of support acting as resistance and it retests and it happens to be last week's high that you want to trade off, then you can combine different elements. But what I think is really important is that you have a number of things that you're looking to have confluence or agreement with. Okay, so there's an example of where we had our level set, but it didn't get there and it didn't set up. Okay, so now we'll look at the next move down. So we'll look at, say, on the 4 hour, this spike. Our bias is to be a seller. And I can look at this move down where it bottoms here. And you can see in this case, it does rally back up to the 6, or very close to the 62, which also coincides with the previous level of support acting as resistance. So there's your previous floor starting to act as a roof, and you'll see price gets up there. Now remember, the stars here give you the area, but they're not aligning to the pip. So that's where I guess you need to then look at your 15-minute and look for the trigger. So let's just drop down on that level and say that's the level that we were looking at, and you can see now it's pretty clear on how the market was working and how you can see these setups occurring on the 15-minute. So let's assume we've missed all of those trades. So I'll go back to a 4 hour. So the trend is down at the moment. So therefore, what am I looking for? Let's just go from this top to the current bottom. And remember, we're just doing it purely on assumption. We don't know that this is going to be the bottom, but it's the lowest point at the moment. And therefore, today I could be saying, depending on what happens, especially on the NFP data and the US data coming out, unemployment data, etc. So could I get a rally back up to this 62.79 area, which also coincides with a couple of previous support levels. Okay, so if I draw that area in today, that allows me now to sort of get a picture of what I'm looking for. You also could be, for those of you who are into different trading methodologies, then it's also like an imbalance candle that occurred. Okay, so you've got this imbalance that may be filled. So therefore, I'm predicting based on my strategy, if I get a pullback up there and then it sets up as a trigger, I'll enter that trade. So remember, folks, we can always go back in hindsight and really nail down the levels and what we're looking for and how to use it. But then what we need to do is, rather than being reactive and educational, we need to be proactive and start to say, right, where is the place today that I want to be a buyer or seller? It may very well be that price blasts higher, blasts through that and never sets up, so we don't get in. Or it may very well be that we don't get a decent enough rally and it keeps going lower at this point. But what we are saying is, based on my strategy, these are the levels I'm looking at and I'm prepared to check in on the market to see whether that happens. Or it could very well be that next week it doesn't set up, for example. So we'll just keep an eye on trading with multiple reasons, confluence of reasons, and then looking for our triggered entry and our risk reward, which is even more important, which we'll get into in our next Telegram video. Okay, traders, so if you want access to that live interactive trading feed, feel free to contact me. My email, it's in this description below. So shoot me through an email. It is available free for all of our clients and it is free to register here at ACY. There's no obligation, of course, to fund your account. The team here are very au fait with this particular strategy, so they're more than happy to discuss it with you. And you can always jump into our senior market strategist, Duncan Cooper. His webinars will cover this type of material and also take you to the next level of complexity and understanding. So feel free to ask Duncan about these levels in his webinar as well. Enjoy those webinars, folks. Enjoy this live interactive trading feed, and I look forward to working with you.